And let us move on and understand the rules to recognize revenue. What is so difficult? What are the rules to recognize revenue? Suppose I go to the grocer, I buy vegetables, I pay him cash. It is sales for the grocer, as simple as that. I have bought vegetables and he will record it as sales. So is there something, what do we mean by rules to recognize revenue? Let me explain this to you through a short story of 4 confused people. 4 people A, B, C and D have the following discussion. Let us begin with first Mr. A, who is an ice cream vendor. He sells ice cream on credit. He goes from door to door and sells ice cream, collects cash. Sometimes he puts his little cart in the park. People come to him and buy ice cream. It is normally on cash and there is no problem. But he says, you know what, I have a particular household where I sell say 5 to 10 ice creams nearly every alternate day. I do not collect change from them every day. What I do is at the end of the month, I give them the bill. See, on the beginning, I give them a bill for the month and they pay me by the first week of the next month. So my question is, the sales that I have made in December, I gave them a bill in 1st January and they will make payment to me by the 6th or 7th of January. So the sales which I make in December, since I have not got the money, should these sales be considered as December sales or should it be considered as January sales? So this is Mr. A's confusion. So Mr. B tells him, are you sure you'll get the money? He says, oh, positive. I go there every day. I have never had a problem with them. Even if I bill them for more ice creams, I'm sure they would not ask. That is the kind of relation we have with them. I will absolutely get the money. So B says, oh, you are lucky. My problem is different. You know what has happened today? Today a customer has walked in and she has bought a TV from my store. She made a payment of $1,000 and the balance $4,000 she has promised to pay in 4 quarterly installments. Now somehow I have a feeling that she may not pay up all her installments. I was under pressure to make this sale. Now my question is, I have got $1,000 on 28th of December. The remaining $4,000, I do not know whether I will get or not. Should I take 5,000 as the sales? Should I take 1,000 as the sales? Or should I not book any sales at all? What do I do? This is Mr. B's confusion because he has a problem with his customer. He does not believe that she is going to pay. He is a bit doubtful that she will pay all the installments. But Mr. C says, oh, well, you have at least sold it. The customer has taken your goods. I want to book sales before. Book sales before? What does that mean? He says, look, I've got a contract. My customer has asked me to make 1,000 units of this product. The price has been settled. And I have finished manufacturing these goods on 29 December. However, my client, my customer will be able to collect these goods only on 5th of January. I want to record the sales now because these are not my goods. These goods I have made, these goods which are lying with me have been made particularly at the customer's instruction. These are his goods and therefore on 29th December I want to book these sales. I do not think these should be sales of January. Mr. D says, haha, I have a much greater problem than all of you. You know what I do? I have a contract for $1 million, but it is to build a bridge. And mind you, it will take me 5 years. What do I do now? 5 years I'll be incurring costs And of course, my customer will be making part payments to me too. How do I recognize this revenue? Do I recognize $1 million at the end of 5 years? Or do I recognize some amount every year? If I recognize some amount every year, what is the amount that I should recognize? You realize the confusions of the 4 people. So now let us understand the rules of revenue recognition. Let us understand the rules of revenue recognition. When to recognize revenue? When they say it is realized. What do you mean by it is realized? Goods are sold or services are rendered and cash is received. And cash is received or claims to cash. Claims to cash may be a receivable note. A note which says that I owe you. So, when products and services are exchanged for cash, it is realized, sale has occurred and I can recognize revenue. Or even if exactly cash has not been recognized, it is a credit sale, I know there is a contractual obligation for the other person to pay. So when assets received in exchange are readily convertible to cash or claims to cash, so it may be in the form of a debtor. Do you remember we have something called receivables? So though cash has not been received, I know a sale transaction has been effected. So when revenue is realized or it is realizable, we can recognize revenue. Sale is effected whether in the form of cash or on credit. Or we also say earned, which is largely for services. I can say when products are delivered or services are performed, we have earned an income, and at that point in time, we should be able to recognize revenue. These are our rules as per, as I said before, US GAAP. So, in one way we can split this, we can decipher this, interpret this as there is an evidence of a contractual agreement, oral or written. There'll be a purchase order. There would probably be something written, but even a verbal, a contractual agreement. Delivery has occurred. Revenue is fixed and determinable. Either I have collected it or collectability is reasonably assured. So there's been a contract for sale. Goods have been delivered. Revenue is fixed. There is no confusion. There is no ambiguity. And more or less, I am sure that money will be collected. That's when we recognize revenue. If that be the case, let us see if we can understand the point of sale. When do we recognize revenue? When there is sale of products. When is revenue to be recognized? I repeat, do you understand what I mean by revenue recognition? When is it to be recorded in the books? When is it to be recognized as a sale in the books of account? So, sale of products is normally on the date of sale or delivery. Date of sale or delivery. If it's services, when would it be? That's right, it would be when the services are performed after performance of the thing. If I'm a consultant, say I'm a tax consultant, somebody comes to me to file a return. When I file the return, I can recognize revenue. My job is done. I have performed. Suppose you have loss or gain on sale of assets. This is not exactly revenue. It is the income. It's called loss or gain on sale of assets. So suppose I have a furniture. I have used it for 3 years, and today the value of the furniture in my books maybe is just $100. And I sell this. I am able to sell this for $110. I'm able to sell this for $110. In that case, $10 is my gain, So when will I recognize this gain? This is recognized when the asset is sold. What about income from the use of an asset? I may hire out my machinery. Then I am paid a rent, or I rent out my premises, right? So that would be on the basis of time or use, maybe rent, royalty, interest. These are the incomes which we record based on the passage of time. Interest in the passage of time. Royalty may be on the units which are being produced, on the number of books that are being sold, etc. Yeah, so the sale of products, sale of services, loss or gain on sale of assets, and income from the use of asset.